Very special guest, Kulin Lalbhai, Executive Director at Arvind. He joins us on the show right now. Kulin, hi, good morning. Let's firstly start by discussing the strategy for the branded apparel business. What is the plan within this space? Because you seem to be scaling this up the maximum.
So Arvind has launched now.com. It's today India's first and largest omni-channel platform. And by this, the strategy is that we are connecting all our offline retail, all of our stores and our warehouse inventory to the online market through now.com. So we are today the largest player in this segment. We have more than 350 stores digitized. And the power of the model is that you get the entire range from the brands which are hosted by us. So all of the group brands that Arvind has are available on now.com. We have partnered with other brands which are not a part of our portfolio as well. And through this strategy, not only do we offer the latest and widest merchandise, because we deliver directly from the store which is in the neighborhood where our customers are, we can deliver products in as less as 3 hours. So it's a very differentiated strategy from the normal e-commerce strategy that one has in India.
Okay, so Kulin, let's talk about the festive demand from tier 1 and tier 2 cities. Where are you seeing maximum traction in terms of geographies?
So right now our traffic on now.com is more centered on the urban areas. That's also a function of the fact that our marketing is currently focused there. But the power of our format is that we are going to be able to take our merchandise to more than 10,000 pin codes. So, we are very happy currently to announce the launch of Gap exclusively on now.com. And a very large global brand like Gap wanting to enter the Indian e-commerce market through an omni-channel route rather than the normal online reseller route just shows how the market has matured. So there is a lot of demand coming in from the digital segment as well, and e-commerce is bound to grow in leaps and bounds. As far as the rest of the market is concerned, I think Festive has started on a good foot. We are 1 week into the beginning of what we call the peak festive season. As of now, the market is responding to our targets. We are happy with the way the market has responded. And we are hoping, we're cautiously optimistic that the next 4 weeks, which are the peak weeks of festive, should be strong as well.
Kulin, you mentioned the tie-up with Gap. Now, it's one of the largest brands in the world. What's the outlook here and where do you see Gap growing to?
Gap is a very unique brand. It's a globally more than a $15 billion group, Gap Inc. And I think India has welcomed Gap with open arms. In a very short period of time, we have grown to 11 stores. It's one of the fastest rollouts of its kind in India in the apparel segment, and all the cities where we have opened up the stores, the customers have welcomed Gap with open arms. And looking at the strong way in which the brand has performed, the global strategy to really launch one's own website. So gap.now.com is in a way Gap hosting its site on now.com. And the brand is so confident of India and the demand outside of the cities where the stores are, that we have specifically looked at online as very core part of the Gap strategy, to the extent that there will be exclusive merchandise which has been bought only for the online sphere with Gap. So with this particular foray, we will be able to take Gap to every corner of India. We'll have the entire Gap range, Gap men, women, Gap kids, Gap baby. It's a very, very large and comprehensive range. And now people sitting in any part of the country will be able to access it 24/7. So we are very excited with that potential. I think for most of our brands, the online segment will hit double digits, move towards 15% of the overall revenue in a very short period of time, which just shows the large potential that the segment has.
Let's talk about the consumption trends. Now, we've seen a muted growth in the last couple of years. Would you say that spending is now finally picking up, and are we in for one of the biggest festival seasons demand this year?
Yeah, I think urban consumption is definitely on the mend. If we look at the second part of last year and the first part of this year, We have definitely seen upticks in the metric of like-for-like sales. Even we posted it in our Q1 results. And that like-for-like sale points to an uptick in urban demand. So I think the rural demand will follow. I think we've had a good monsoon, but I think urban consumption has already started its upward trend. We believe it can further strengthen. I think of late with the pay commission and various other stimuli that have happened, the cooling down of inflation, I think the urban consumption trend should now continue to strengthen over the next year and a half.
Kulin, so give us a quantifiable outlook in terms of the revenue CAGR for Arvind consolidated and then to the pie of that for the online business.
So that's what I was alluding to. So, suppose we are looking at $1 billion in revenue in 3 years. I am very confident that online as a channel will be more than 10% of that revenue.
So let me get closing comments from you. Now there are media reports that you are looking at diversifying in the footwear segment. You've just diversified into the cosmetic market with your brand Shipora. So what is the update there?
On any market rumors, we would as a policy not comment, and this is completely market speculation. So I have nothing specific to say on this. On the footwear side, as we have maintained, it's a business we have been in. It's a business which is an adjacency to our apparel lifestyle business. All our main large brands, be it Arrow, US Polo, Flying Machine, have always had shoe extensions. The company is just focusing on scaling that business up. So it's a part of the core lifestyle business that we are already in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.